Okay. Hello, everybody. Ron and Travis coming at you live for another Bootleg Weekly episode. Ron, how's it going?
Good. How are you, Travis?
I'm doing well, buddy. I can't keep it going. I'm sorry.
All right. Serious question, guys. Oh, by the way, if you're new to us, I guess we'll do the intro real quick first. Today, as always, we're going to talk about some specific topics. We put some of those in the title. Mega investors. We're going to talk about what those moves are. There's some companies that I know a lot of you guys follow that they've piled into, including the U.S. government. I guess we can qualify them as a mega investor, and SoftBank as well. We'll talk about Intel, which will be related to some of that. Eli Lilly and Novo Nordisk and HIMSS as well. Rate cuts are certainly a topic. And after, we'll get into a lot of things related to your questions. So I see some people saying, please discuss PayPal. I hadn't planned to, but if you have questions, we'll get to those at the end. But I'm going to create a poll, and we'll see, should we change the name of our show to the Ron and Travis Show? So instead of Bootleg Weekly.
Don't put that on the table. Don't leave that to them. 10 are live at the same time. This is a test, B-dubs, to see how much you love us. We did this deliberately.
All right. I've started the poll. And Travis, you can do yours too. Tanner is live at the same time. Of course he is. He's always live. So, all right. Where do you want to start?
We can start wherever. Let me see the message that I sent you with the topic. Yeah, mega investors. We got news of this on Friday, and lots of interesting. We talked a little bit about it on the FinTech Friday show, but I like this question. We're going to talk about this at some point. A couple of more non-conventional picks. Did you see Michael Burry's portfolio at all?
I saw it, but you're going to need to remind me.
Dude's buying like call options on a whole bunch of different names.
Yeah, which is interesting. Yeah, if you guys aren't familiar with him, he's a well-known, for the short squeeze, not short squeeze, the Big Short. He's covered in that movie. It's based on real life in 2008. A very noted short seller. He doesn't always sell short, but more often than not, he is. And you wouldn't expect him to pivot into a bunch of names at all-time highs, but go ahead.
Here we go. Let me share my screen. These are some of the holding updates of some famous investors. So as we, of course, know, Uncle Warren bought some UNH, about 5 million shares casually, $311 reported price here. A bunch of other names. I don't know if there's any that you want to pause on, Roy, but Bill Ackman added Amazon for the first time in Q2. So you can see here, it's 9%, 9.3% of his portfolio, Amazon holding 5.8 million shares at $219 reported price. So that was fairly interesting. He also added more Google, which you can see here. Let me put us on the side so you can see the whole thing. And very interesting. And then we have Mr. Michael Burry. He bought a bunch of Lululemon, UNH, Mercado Libre, Regeneron, reduced Estee Lauder, but he was also buying call options on a lot of these.
Yeah, and the one that we'll see, guys, it's a big trend is UNH. I didn't look at what it did today. I'm not invested in that company, but there is a lot of mega investors, including Papa Warren Buffett, that pivoted into UNH as well. So there's a reason why the market ended up really loving UNH, because it's like, oh man, if Warren Buffett is in something, the market buys it for a while. May have gone down today. Let's see. Yeah, it's down a little bit.
It was very modestly down today. Yeah, nothing really crazy. Webull, wow.
Mm-hmm.
I see.
Yeah, I saw Webull and a couple of names too.
Really?
Mm-hmm.
Do you think they watch the show? Do you think they have some turn watching the show and taking notes as to what the retail sentiment is at?
I think they're watching the show and they're like, "Oh, these guys are out of Webull. Okay, they're idiots. I'm getting in." So,
you think Bill Ackman's a viewer? You think he voted in that poll? He's like, "Yeah, they should definitely change the name to Ron and Travis Show."
I don't know. We'll see. Let's see. 57% of you guys say no, so I guess we'll keep bootleg.
Bootleg Weekly it is, yeah. And then, yeah, GoodRx and Nova, we're going to talk about that. So,
yeah.
Was there anything else in the mega investor buys that was interesting to you?
So I guess there's two things, and they're both kind of related. We'll talk about Intel. I think it's the next topic in just a second before we talk about HIMS. A lot of people. So anytime you see these are quarterly filings that have to come out once you have a certain size of a position, or if that's your company, you have to do it a little bit more often. Unless you're Warren Buffett, then you have secret stocks so you don't have to disclose for some reason. I don't know. But regardless, most people have to play by the same rules. And usually what happens is when mega investors pile into something, especially if they have a well-known name, a lot of people chase them as well. And so in each of these, I believe, I mean, there's probably some exceptions. There was a nice little pump after hours when those filings came out. So I just want to caution, like you guys, as far as retail, it's fine to trade, do whatever, but just know just because mega investors are investing in something doesn't necessarily, it's bullish, but it doesn't necessarily mean anything has changed for the company. What I mean is this, that, if, for instance, mega investors, we've seen this before, that a lot of mega investors piled into Alibaba and it stayed down for a long, long time. Bill Ackman, he has a more concentrated portfolio. There's things that he has gone very heavy in, ended up losing money and exited. So just because these guys have huge funds doesn't mean that they're infallible. They're not. You look at their return rate, and it's, for most of them, it's pretty good. Some, it's amazing and consistently amazing. Some will just have like really good years and then just kind of mediocre returns after that. It's hard to manage a fund. So it's not a guarantee, and it doesn't usually change anything in the underlying business. Now, there are some exceptions. Some of these, actually, none of the names that you gave, but there are some that are activist investors. And what they do when they have a large enough stake is they'll exert force on a company, whether it's good or bad. But Elliott is one of the better known ones of those. And they'll basically say, okay, since we have a large controlling stake, we want you to make these specific changes. And usually it's things that bring the company back into focus, hopefully focus on the bottom line. They're wanting to return shareholder value. There's a lot of other investors that just put their money in and they're like, hey, do what you're doing. I like it. So don't think that, like, for UNH is, I think, the biggest one. It said, and I called, and I still think it's this way, that UNH, this is their 2023. They probably need a couple of years, like PayPal has, just to really see that momentum up. So it could well be, and it wouldn't surprise me, that we have a higher floor because of the mega investors. So they tended to come in and not really sell right away unless something really changes. But I wouldn't necessarily expect it to go back to the 500 range at all. Same with Lululemon, same with all the other names that you see that are beaten up, that there are some actual issues with the company. So just be aware of that, guys. And also with Intel that we're going to talk about in just a second.
Yeah, I'm looking forward to talking about that. UNH definitely won't bounce back to 500 just on the back of this news alone. But I also think that the folks that you saw buying UNH this quarter are going to keep buying UNH in Q3 because their reported price is still higher than where we're trading right now, number one. And number two, UNH had not fallen into the low 200s by the time, when this quarter ended, when they had to report. So chances are you're going to see some buys from Warren Buffett of UNH in Q3 when they report in a couple months, and of all of these other mega investors who are adding to their position. So I think it's going to do good things for sentiment. Obviously, in order for the company to go back to 500, 600 where it was and sustain there, it has to be driven by the company fundamentals. But a lot of people are rooting for it. And I think that's a stark contrast to a couple of weeks ago when everybody was saying, oh, well, I'll pick it up at 180 when it falls down there. And we were like within single-digit percentages of the COVID lows.
Yeah. It was crushed. It's not a space I want to be in. I think people will be fine in it, but we've talked about that before. But more want to say, like, just because the price changes or there's some big people in it too, it doesn't actually usually change the underlying business. There are exceptions. So just, maybe like if you're in UNH, and I know you are, Tevis.
Sure am.
So sometimes it just makes sense to say, you know what, this was an unexpected spike. This is awesome. I'm going to take some gains. Nothing wrong with that.
Yeah, yeah. And I mean, look, man, if you bought it at 250 and then it just so happened that it bounced to 300 and you're holding it for a week or two, I don't think there's anything like at that point you haven't been able to layer in to build it into a long-term position if that is your intention, and you're still probably researching, a lot, and it might be a quick trade, and that's fine too.
Yeah, and Duck just said unexpected spike for me equals sell a covered call. That's a way to bank some gains without necessarily selling. Yeah, I've done that before too. That's a nice vehicle.
I have covered calls. I had covered calls on half my UNH position going into this week, and then I had to write some more this week. So I definitely have covered calls on all of my UNH position as we speak, and then I have spreads, and then I have cash secured puts as well. So,
yeah. All right. So Intel, similar setup. There is a mega investor corporation, SoftBank, that pivoted massively. We'll pull that up here in just a second. Also, the U.S. government, Tevis, the U.S. government piece. That's one that I've not spent too much time on other than just reading the headlines and a couple notes. Any takeaways from that, or any thoughts on that specifically? And then we'll talk about SoftBank and Intel.
Yeah, let me see if I can pull up the news. But essentially, the U.S. is considering taking an equity stake in major chip makers, and that doesn't only include Intel. That includes others as well as potential beneficiaries. I think this was a proposal by Lutnick. Would be really interesting, right? Because UNH is, or Intel is something that I think has been gobbled up by all of the politicians and a lot of insider buying of like Congress people and representatives who are buying Intel stock and have been buying over the summer. And if this were to happen, then I mean, the question there would be like, what kind of preferential treatment would Intel receive relative to other players from the government's perspective? Now, if the government is taking equity stakes in, Micron and TSM and all of these other names and NVIDIA and whatnot, then sure, it's a level playing field. And that's fine. I think the SoftBank news was on the back of this government news that they probably had some advance notice and some material on public information, perhaps, and they just bought a whole bunch. But it would be interesting, right, to essentially have this government stake, and then I think they had like cash grants for stock. Essentially. So Lutnick was saying that Intel has to give the government equity in return for the CHIPS Act fund, where they would convert the grants into equity, and it wouldn't really come with any voting privileges, any government's rights into Intel, but it's something that the government is doing in an attempt to reshore some of that U.S. manufacturing.
Yeah, I don't know that I like it. I don't necessarily want the government directly itself to own a stake. Now, Intel maybe is okay-ish just because essentially the government's giving them massive piles of cash and money, and they're just they're not executing well. They've had a lot of issues too. So but I would not want it to be opening the door to a lot of this. I wouldn't want it to be widespread. I know it's just chip. But sometimes these sort of things can start with just this and then be like, hey, we've got equity stake in all 500 of the S&P 500 companies, including Williams-Sonoma, but not Robinhood for some reason.
Well, I mean, Trump even made a comment, I think, around the leadership of Intel. He said, do you want me to throw this tweet up, Roy?
Yeah. So this is the SoftBank announcement. They're making a $2 billion investment. Let's see if we can get this bigger. There we go. And so Masayoshi Son, the chairman, he's bullish. He's been bullish in semiconductors for a long time too. But under the agreement, SoftBank will pay $23 a share for Intel common stock. And that's a massive, massive investment. Intel themselves, you can see it's definitely up, and it's been up for a while. But if you look at year to date, I mean, it's up, which is nice. It's doing better than PayPal. But it's in essence, when in doubt, zoom out. Well, it's where it was back in '97. So that's been a little bit painful, a little bit of an opportunity cost, I'd say, for investors back in '97. Now, if you didn't sell any here, you probably have yourself to blame. But there's a reason why it's been trading like this. It's been very poorly managed, mismanaged. They're one of the about as bullish as the macro could be for their type of business, and they're still, like, you look at the results and it's miserable. They've made a ton of mistakes. Not everything they're doing is bad. There is some upside, but for me anyway, this gives them, like, they don't. The cash helps, but I mean, that's not really the issue that they've had. And
Yeah.
so for me, this doesn't really change the thesis at all. I see it the same thing as mega investors coming into UNH, where it's like, okay, great. That probably gives a higher floor. These people are not going to, like, get in and then get out in 3 weeks with some profits. So that's nice, but man, I still wouldn't want to be in Intel. Could be wrong. Maybe it'll work out great. I don't think that they're dying or anything like that. I think it's going to continue to be an opportunity cost, like it has been for almost 30 years.
Yeah, I mean, like, I think you and I, our politics align in being a little bit more libertarian, and just free market will prevail at the end. And I think this tips the scale. Even though the government might not want voting shares, I think, like, even Trump throwing out a tweet before this even happened, he is like, on Thursday last week, he said the CEO of Intel is highly conflicted and must resign immediately. And and so you're like, well, we're at a point right now where you can throw your weight around online through Twitter or his own platform, whatever, that if they, as in the government, has a stake, it will open the door for some preferential treatment. And if you have a company that maybe is not as high executing as its competitors, you don't want that to be artificially propped up, because then it becomes dead weight on everybody.
Yeah. By the way, I made a mistake. And I agree. I figured we were in alignment on that. Neil Weston said, and he's correct, poorly managed lost 60% due to inflation. Tariffs are a factor. Inflation. So it's been more than an opportunity cost, because back then, since Intel has not changed in price since '97, there's been a lot of inflation. If you literally took cash and stuck it in a hole in the ground and you pulled it out, it's like one of the worst ways to do investments. You would be up more than Intel if you did that in 1997. So yeah, that's terrible. That doesn't mean it's an opportunity cost going forward, but I don't know. Like, I really question that. It's fine if SoftBank wants to invest. We'll see if the government does or not. If it actually happens, the price will probably jump up. But like you said, it's for other chip manufacturers as well. I'd rather just go harder into NVIDIA or even AMD. Like, Intel is speculative play at best. Like, I'd rather invest in Peloton than Intel, honestly.
That's a big statement.
Well, have you been seeing the stock for Peloton and the earnings?
I have not, but let's jump into that in just a second. Duck says taxpayer money investing in companies doing a crappy job is interesting. Yeah, that happens all the time. Like, throw a dart at a Canadian company and probably you're going to have some type of taxpayer money bailing them out because they've gone bankrupt. In the case of our airlines and telcos and whatnot. And that's exactly the fear here, right? Because, like, I think the government has the carrot and the stick with regards to at least the Trump administration, right? With regards to the tariffs, and now this having some preferential treatment and saying, oh yeah, we're going to take an equity stake and become a partner with a seat at the table. Like, I don't know that I want either of those things affecting these companies. And I want to let the best companies win without any external factors. But that's not necessarily the world that we live in.
Yeah, sadly. I'd like to see less government investment like that. But yeah, it is what it is. So regarding Peloton, they're down massively today. I'm not actually investing. That is a swing position that I made a little bit of money in, and I'm like, okay, I'll get out. I think that they'll be bought out at some point. But if you look at the company, like they were mismanaged for a long time.
Yep.
Well, management is a lot better now. They made improvements. You look at their bottom line. There's some growth there as well. So this can happen even to a company like Intel. It can happen to a company like PayPal. It can happen to a lot of companies where they're written off essentially for dead, or people forgot or sleeping on them. For some reason, retail is very interested in Intel for whatever reason. But things can change. It usually takes time, and the older and the more entrenched and set in their ways a company is, and Intel's been around a long time, guys.
Yeah.
The harder it is to pivot, and it takes time, it takes effort, it takes consistency. So we'll have to see whether that or not they're able to pull that through. I think Peloton's going to make it though, so good for them.
They had to completely reconstruct their business model though, because right now I think they're leaning much heavier on the subscription side of the business, and it's not been easy. But yeah, maybe. I mean, if you extrapolate to the maximum, a company is either going to go to infinity or zero. Like it becomes a binary event. It's either they're going to go bankrupt or they're going to be successful if they don't go bankrupt. And that also applies to Intel. And it might take 100 years, but if they haven't gone bankrupt yet, they're either going to go bankrupt or they're going to be successful at some point in time.
Yep. That happens all the time too. So maybe before HIMSS, we'll talk about, because I see a couple of people commenting on this, and I think this is a good topic too. Market had a big pullback today. And were you on X much today at all?
I sure was.
All right. Yeah, I was just kind of in and out, like in the morning, in the afternoon, but sentiment went in a hurry from incredibly bullish, all-time highs, everything's going up, we're all geniuses, to recession and things are terrible, and this is the beginning of the end, and get flight to safety in a hurry. And this is the way that things happen. The biggest piece seems to be revolving around Jerome Powell rate cuts. There are other pieces and elements out there too. Did you see anything that stood out? Was that a similar read on sentiment that you found on X, or did you see a lot of people just taking this, in stride?
I think the sentiment on X was definitely emotional. And that to me signals that we have, in fact, been a little bit running hot, because if people are getting emotional for us to dip, 7% off a company that's done like 170% this year, it's like, well, the problem is you. It's not the stock. Like, I think this dip, while it wasn't great to experience as an investor, is something that we've experienced many, many, many times before. And generally speaking, is a great opportunity for not only you to load up, but also for the market to take a breath so that it can have a more sustainable next leg forward. Because, we've been close to or at extreme greed now for the last couple of months. And, I think we need to cool off a little bit before we can go higher. Maybe let me throw up this chart, and I'd love for you to maybe comment on this. So here we have shown in a line graph the fear and greed index, and you have extreme greed here at the top and extreme fear. My thing is lagging, but okay. And so you can see that in January of there you go. In January of 2025, we were sort of at fear levels. And then in April, we fell completely to extreme fear. And then since that time, we've been closer to extreme greed territory. And we've now sort of pulled back just into the more neutral range. My screen is like 10 seconds behind because CNN is killing me with the ads and the videos that pop up. So I should have just taken a screenshot and
oh boy, that they're selling the ads rapidly. So
they're so brutal. My entire thing just completely crashed. Thanks, CNN. Always a pleasure.
Yeah, this is healthy and it needs to be reminded. We talked about this, I think 3 weeks ago. I had a video too around the same time as because going to that video, my thesis was I saw a lot of top signals, and then I did more digging, and I was like, soon, but maybe not yet. And then you can never like perfectly time these things, but you can tell when things are near. It's kind of like growing up in Alaska that you didn't know when the first snowfall would happen, but you knew it was getting close. So it's inevitable in a bull market. Pullback does not mean that the bull market's over. It doesn't mean that you should sell your stocks and dump them. Now, you do you. Like if you're over leveraged, if you're into some crazy things like UNH calls for $500 like in the next month, you might want to take some risk off the table.
I love
That's probably not happening, and might be even a little up for you. So it's okay to take some gains, but pullbacks are also not corrections necessarily. A 10% drawdown on the major indices. Pullbacks are also not crashes or even bear markets. I think that the bull market is very much intact, and the evidence of that, is this right here. Yeah, here it is.
And by the way, I'm bookmarking all of these questions. Some great questions being asked. We are going to address them all at the end, so make sure you stick around. And go ahead.
Yeah. So this is from the transcript, and I like following them because a lot of times they'll throw up something that's really interesting from the company I'm not paying attention to. So, but they mentioned here yesterday of the 459 companies that have reported quarter two earnings so far, 80.2% beat EPS estimates. That's a little bit above average. There is usually more beats than misses. 78% beat revenue estimates. What's impressive is this: earnings are up 12.9% year over year. This is not, this is like real profit, bottom line dollar. That's a huge amount year over year for that size of companies, and even bigger, up 14.8% excluding energy. Revenue is up, 6.3%, 7.4% excluding energy. Quarter three earning projections are also very healthy as well. This is in spite of, usually in these projections, I'm not sure what they mean by projections, if this is analysts. I think it is analysts. They usually, depending on the company, have some stuff just because of caution, like tariff noise and stuff. So when companies have real strong earnings on a consistent basis, and things are really good and growing very well, and you can go through all these slides and just see the different sectors and how they compare, the estimates, the growth and everything. That's just very, very good. Now, if we had the opposite environment, that the stocks had been flying up high, earnings season was okay-ish. It wasn't amazing. Guidance was okay-ish. It wasn't amazing. We might be in for it. And anything could happen with the stock price. But I'm just saying that a lot of the growth that's been happening is very real, very palpable on both the top and especially the bottom line as well. So I think the bull market is very intact. There's some tariff noise out there. There's always something that causes the market to sell off a little bit. And we might see this for the next few weeks. What's also interesting, go ahead, Tivis.
I wasn't going to say anything.
Oh, all right. So let's look at some charts because Nala likes charts. Let me throw up some comparables to, that's wrong one. We'll do S&P 500 and also the NASDAQ. All right. So what's interesting is, if you look at the uptrend, like the Russell 2K has been up a lot. That's one of the reasons why some of my holdings, which are small caps, and one that we mentioned, Peloton, and even like a bunch of sketchier companies like Open Door have been doing very well. It's, somewhat sector related, a risk on environment, and we could see everything bottomed here around the tariff. We've been in an uptrend for a long, long time. If you look at the RSI on the major indices, this is the Russell 2000, so it's not, don't read too much in it. But even the Russell 2000 nearly got into overbought territory. Bull market, that's not too shocking. S&P 500 has been up there as well. But I mean, this is not year to date. Let me back up. Year to date, it's been a good season. It's not been like amazing, the most ridiculous or anything like that. But there's nothing here in this chart that indicates like, hey, we're going to need to sell off and things are oversold. Now, what I want to do is actually remove this. Let's just look at the S&P 500 real quick. And let me remove the comparables just because this will make it a little bit cleaner. All right. So let's do as far back as Legend. Let's just go. if you're a long-term investor and you're investing in good companies or you're investing in the index, and there's nothing wrong to do this. I mean, there's been some major drawdowns in the index over time, but these tend to get bought up. Like over the last year, of course, we remember the tariff noise and everything that was happening here. Massive, unexpected drawdown that nearly brought us into a bear market. If it closed that day beneath where it was trading intraday, we would actually technically be in a bear market. I know Tom Lee is calling this a new bull market. I mean, maybe he's right. It doesn't matter. It's a bull market either way. But there's a lot of corrections. There's a lot of pullbacks, and there's all different reasons for it. It's not all related to tariffs as well. Even if you look at it over 5 years, like, I don't know. There's worse places to do than park your money into quality companies that are, well, the S&P 500 is American. Not saying that all international companies are bad to invest in. So just when in doubt, zoom out. And this is the good side of that. If you're feeling nervous and scared, maybe it's time to take some risk off the table. But yeah, nothing. I've not seen anything that really changes my mind. There is a little bit more weakness in the consumer and a little bit more impact in tariffs than I think was being fully appreciated. But I think a lot of this too comes down to the rate cuts. So that's really shifted a lot too. And I shouldn't have closed my share tab.
Yeah, and one thing I'll say on that April dip is that's where the best opportunities were made during April. And let me just remind some of you guys, because you might think this is unfathomable, but during April, just several months ago, when the market dipped, SoFi fell to $8.60. Hood fell to $30. Palantir fell to $70. Like, you see all of your favorite stock, and they probably fell quite a bit. HIMS fell to $25. What have you? Like every one of the stocks that you are like, oh my gosh, that's run so much, was at prices that you guys would be jumping over each other to try to get at that price. And that was just April. That was just several months ago.
Yeah, I don't remember if it's Peter Lynch, but it's one of these mega famous investor guys that said that the stock market is the only place where people run away from a good sell. So yeah, April is the time. I didn't go fully in April. I did buy a lot of names and added, but I was slowly DCing. I thought we'd have more time. Sometimes we're not given that, especially in a bull market. So here are the September rate cut probability. So September 17th. So it's around the corner, and you can just see how much these have shifted. From a month ago, we were looking at 55% chance of a rate cut, 40% staying pat. Just a week ago, nope, it's basically going to be a rate cut. And then today, that moved tremendously as well. Now, there are some reads as far as CPI, for instance, and inflation, PCE as well, that indicate there's some issues with inflation. There's probably enough of an excuse for Powell to stand pat yet again, although he really should cut. But yes, exactly. That's the saying. Thank you. But if we look at the end of the year, this is the target rate. Current rate is 425 to 450. Only 1.2% people that say there's going to be no rate cuts. Consensus is for 2. There are some people that say 3. And I'd say there's a strong consensus for basically what Anthony Noto from SoFi said. If they're looking at like 2, maybe 2.5 rate cuts, I think that's what we get. There's only 3 Fed meetings left. So unless there's emergency rate cuts, which there shouldn't be, it'd be the stupidest thing and stupidest way to do this. They're going to cut 2 out of these 3 times, probably, instead of just like 150 basis point cut. Doesn't matter. It's 2 cuts either way. We'll have to see, though. So what do you think Powell's going to do in September, and does it actually matter for us, Tennis?
I think that the CME tool has been very accurate, that the market consensus around what's going to happen has actually happened like the last 8 or 9 times in a row. We haven't had very many surprises. Now, Powell and Trump have a very strange relationship, let's say. And I could see him doing nothing just to stick it to Trump, but I think that reason will prevail, and then we will get a rate cut in September. I think that is going to be, I don't even know. I think we might dip either way. Like if he doesn't cut, we'll dip, super dip. And then if he does cut, we might still dip because it might be a sell the news events.
Yeah, maybe. Like I think the market. One of the issues was that the market was basically 100% certain that Powell would cut in September. I thought that was a little ambitious, just because he's obdurate. The nice thing about Powell, though, is he has broadcasted very well uh, the expectations and what they're doing. So that's one of the reasons why the CME Fed Watch has been so reliable. This time it might be wrong. I have no inkling whether or not he's going to cut. If he doesn't cut, I do think that the market sells off. If he does, probably get a little pump. Don't know if the pump will last or not. A lot of it too depends on some of those macro reads between now and then too.
I mean, we haven't had like the best inflation reads. We haven't had the best job reads. And I mean, call it however you want, but I think by and large, Powell has done a fairly good job of navigating, simply because like at this point with rates where they are, like you don't expect the market to be at all-time highs and everything surging and euphoria, and it's seeming like 2021, when rates were zero because of COVID. And so to do that while simultaneously trying to have high rates to keep inflation low and trying to manage the jobs, I think that if he had cut already, it would be maybe the sugar high that the market would have wanted, even though they're getting it without the cuts, but ultimately worse for the economy because inflation would just come back even higher. I don't know. Maybe I'm alone in that thought.
Yeah, we'll have to see. It's relatively soon. There will be a lot of movement, I think, in those rate cut probabilities too between now and then. I think there is a wildcard factor, and you alluded to it too, with the interesting relationship between Powell and Trump, despite Trump being the one that actually appointed him, which he seemed to forget. Powell seems, at least, to guard his emotions very closely, and he may be very unemotional. But if there's a little bit of vindictiveness in him, and it pushes him just a little bit more towards like, let's wait one more time to cut. I mean, I wouldn't be shocked. He wouldn't say it that way, but there's enough data out there, like from the macro, that he could make a reasonable argument to not cut. And I don't think he should do that, but I mean, they've done that before, so we'll have to see.
Brock, we talked about this earlier in the show on Intel specifically.
Yeah, I don't like it. Neither of us like it. So
I think when I sent this to Roy or the group chat, I said, I alluded to some stupid joke about China taking big stakes. But hey, look, like China taking a big stake in your company could end up being really bad, or it could end up being, NEO at $2 and this thing goes to $40 because the government just won't let these companies die. Either way, I don't think that's the best thing for the company. I think Roy and I are both on the side of letting the market decide, and things in the market naturally having to die to make room for new things in the market.
Mm-hmm.
This is one thing I want to bring up just to rile you up a little bit. Citron Research argues its valuation on Palantir is significantly inflated, proposing that a comparison to OpenAI's recent $500 billion valuation could suggest a more realistic price of approximately $40 on Palantir. And in fact, Citron not only announced that they were short on Palantir yesterday, or they had a short report, but I believe today, Andrew Left of Citron came out and said that they were doubling their short on Palantir.
Yeah, I hope they get destroyed. These guys, I mean, they're being they've not been indicted, but if you look at their criminal record, they're actually under investigation. Amit, Tanner, and I talked about it yesterday, that like the timing of the release on their short report, I think maybe is to distract people from what's actually happening in the lawsuit there. I'm not against shorting. I don't think it should necessarily be illegal. I don't think retail should do it. I think it's dangerous. These guys have been short on all the wrong names consistently for a really long time. And I've not all of the research. I've not read like every single page of his research, but this is what he put out yesterday. It's public. You guys can look it up and read it. The only good argument that he actually makes is that Palantir is expensive. And yeah, he probably used ChatGPT to make this too. So Alex Karp does not look like that, but okay. Now, this part right here, that I think is absolutely ridiculous and stupid. And he makes a lot of mistakes throughout this. One is basically he says, let's see if I can find it. Not moat there. No, it's not moat. Competition. All right. He has this weird take that OpenAI is basically doesn't have competition and Palantir has a ton of competition. That's like the reverse of actual reality. OpenAI is, an effective business. I think Sam Altman, it's too early to tell whether he's a unicorn CEO or just a very, very good one. And just a very good one, it's not bad. But there is a lot of competition to OpenAI. There's a lot of new and hungry competitors. And I think the biggest competition is Google. Like Gemini is very credible. It's very good product. And unlike OpenAI, which burns a ton of cash right now, they're not profitable at all. Google can, if they want to gain a lot of market share for Gemini, and I think at some point they'll probably go this route, they can just give away their best product for free and get a lot, or next to free, and get a lot of money. So yeah, Citron, that's the funny thing is 2021, 2022.
Yep.
I don't remember if it's late 21 or early 2022, but he basically said, hey, we're not shorting anymore. We're done shorting. We've messed up. We've lost a lot of money. And this idiot's back at it again, based on valuation only. But like he doesn't understand. He doesn't seem to understand the technology of Palantir. Doesn't understand the moat. He gets a lot of basic things wrong. He's saying 17x price to sales, which would be Palantir at $40, is egregious. And you look for SaaS companies. I mean, I looked up, I think maybe 10 SaaS companies that I was very familiar with. I'm like, let me put all these in, see what the price of sales are. And like half of them traded at 17x price of sales or higher. So I'm like, okay, this guy's an idiot. Well, I don't think he's the brightest person in the world. I think that what short sellers tend to do, and I think it's a huge mistake, is they, instead of just saying, okay, this is really expensive, and I think that there's headwinds because of this, and this, and they put like the real credible issues, like they have 3 ideas that like a Palantir, there's these 3 bit areas of weakness. Like I could even do it. Like, okay, the valuation is extreme. They're not growing internationally at all. And that $6 billion of money that they have, they're not doing anything with it as well. So the growth inevitably, as they get in the law of big numbers, it's going to slow down. And any slight weakness in numbers is going to pull back the stock. There you go. That's all you need to do as a short seller. That's your short report. Instead, they do these ridiculous releases where this was, by the way, a follow-up, like the main research report itself, which I've not read. I've looked at pieces of it. It's long. And instead of just taking, okay, the best of the 3 best arguments, it goes from something that's absolutely right on the extreme valuation to like the most weird, sketchy, extreme arguments that I think that even Citron doesn't believe. And I think that just dilutes your thesis. These guys, I don't know. I think short sellers, they seem smart, but they're really just throwing spaghetti at the wall, trying to do anything that they can to spark fear. And then in times like this, and I'm sure today, maybe they're posting and writing stuff. I didn't even look. I'm not paying this guy much attention. They're probably like, oh, look how geniuses we are, because Palantir did pull back a good bit. So did everything else in the market that has been up a lot. So sometimes you can get a win even if you're completely wrong. And he is right on the valuation, frankly. He could make some money. If he does, no harm, no foul. But what I don't like is lazy comps, which frankly this is a complete misunderstanding of who Palantir is, and a lot of sketchy and just factually incorrect stuff that's out there. And he's not the only short seller that does it, but he's one of the worst. So hope he has another GameStop moment where he gets blown up.
Yeah, that's interesting. I remembered halfway through that when you were talking about Andrew Left and GameStop that we should talk about Chamath's new SPAC. So let's add that to the list. But on this note, I think I don't agree with evaluation, but I also think it's like false equivalency to say like, oh, well, just because OpenAI is at worth $500 million means that Palantir should be worth less. It's like, dude, I can make the same thing. Like, oh, if Palantir is worth 300 billion, then SoFi should at least be 100 billion. It's just so silly that
or if HIMS trades at the price that sells a Palantir, imagine. And it's like, well, yeah, but like, should Palantir be there? No.
Yeah, exactly.
And B, should HIMS be there? Well, really no. Like Palantir's doing a lot of things right. HIMS, we'll talk about HIMS too in a moment, but yeah, it's lazy.
Yeah, and I do want to bring this comment up because I think it was a good comment. Solo King says, no offense, but I actually think Palantir timing is perfect. Not only just because Jim Cramer posted Palantir to $200 at the very top by Citron, because I think defense stocks will fall if Trump gets a peace deal.
Yeah, maybe. Palantir is, the thing with Palantir is it's not like a pure defense play, and I don't think the market sees it that way. It might pull back a little bit. We've seen that before when there's those sort of rumors, but not much. It's not significant. So I'd be a little bit surprised, especially because it's not impacting their sales. But the stock is trading on narrative much more than fundamentals. They're doing a lot. I do. There's two reasons why, really. One is they put out reports like this that are just factually incorrect and lazy comps. And they try to get a lot of sentiment on their side and people to shift. And if you're using facts and reason, great. I could have a short argument on every single one stock that I own, a bear argument, and I'm bullish on all of them. But the other thing is short sellers oftentimes target companies that are on the cusp of making it. And they could be special, but they say, you know what, we're going to short them. And they're trying, and we know that the company needs a longer cash runway. They need to sell some of their own stock to be able to get some funds and actually make it to the next level. And instead they try to short them to zero, because the way short selling works is you're basically selling stock that you don't own. And at some point you have to rebuy it. Now, in a good scenario, you're of course paying interest the entire time because it is a form of loan. But in a good scenario, it's like, well, maybe you short Palantir at 190, time it perfectly at the top. It goes to 150. You made a bunch of money. That's great. But a lot of short sellers, and they're not trying to do this in Palantir. It'd be impossible. Well, if they did, God bless them, and they're going to lose a lot of money. But with a lot of other companies that are weaker, like Tesla is probably the most notorious example, heavy short interest of people and companies that were trying to not just make some money, which is fine. Want to make some money? Good. But they were trying to put the company to zero. Same with GameStop. Same with AMC. Same with a lot of the classic short squeezes. Now, that doesn't mean that there isn't a time like Bed Bath & Beyond where companies, frankly, it's past their time. They deserve to die. Short sellers can make a lot of infinite money. Well, not infinite money, but 100% profit at that point. But trying to kill a fantastic, fabulous company like Tesla just because you want to make some money and drive it to zero into bankruptcy, and they were very close to being able to do it, I think is morally reprehensible and actually evil. So yes.
Speaking of, have you seen this new account, Roy, that just popped up? It's called Short Palantir. Literally an account that was created a couple of days ago, and posting every day their Palantir short position, and it's a massive position. It's like $1 million short Palantir position.
Hey, I got no problem with it. They make some money, good for them.
Yeah, I think this stream is just me trying to rile me up with this Palantir short commentary, but yeah, I think both can be right, just in different time frames.
Yeah, and like one other comment too, because Austin Harrison said that short selling is mathematically harder. The most you can make if you sell a stock short is 100%. That's if it goes to $0. Most companies are not going to do that. You're paying interest the entire time. The stock market is already biased to go up and to the right. So if you're retail, like, you know, I've bought puts before and been bearish on companies and made some money there, especially when it's a very sketchy company that should not be up the way it is. But I mean, that's not the same as shorting. You limit your downside, and short selling when it goes wrong, like with Citron. And I think that I don't think this will happen again necessarily with Palantir. Like, there's not going to be a short squeeze or anything like that. It's very, very little shorts just because they see what the company's doing and they're like, okay, it's dumb to actually short things just based on pure valuation. Leave that to Citron. But there's unlimited downside. So that's what happened with GameStop. That's what happened with AMC. Is the shorts, short the stock at like $14 and it spikes to $80. They're hugely underwater. They have to rebuy those shares. They're paying interest every single day. And it's just at some point, like they get crushed. They go out of business sometimes. We actually saw quite a few of those having to get bailed out or go out of business entirely. And they just get greedy.
Speaking of shorting again, the famous inverse Kramer said, Chamath just launched a new SPAC if anyone is needing a new short target. This is the American Exceptionalism Acquisition Corp. And it says that while we may pursue an initial business combination in any business or industry, we intend to capitalize on the ability of our management team and initially focus our search on identifying a prospective target business that can benefit from our founder, Chamath Palihapitiya's historical areas of business expertise. We also had hold on, let me throw this up. We also had this, where Chamath's new SPAC S1 literally says only invest what you can lose completely and, quote, no crying in the casino. Are you telling me this is not a bubble? So here you say that this investment is a small part of an otherwise diversified portfolio. This investment is a quantum of capital they can afford to completely lose, and see if they do lose their entire capital, they will embody the adage from President Trump that there can be, quote, no crying in the casino. Yeah, maybe. So here's the performance summary for prior SPACs. Open Door down 65%, Clover down 74%, Virgin Galactic down 99%, and of course, SoFi, which is still down 20%, but not as down as the others. So, Roy, maybe let's have your thoughts there on what you think this is.
Yeah, I went in, and I'll have actually a video at some point into a lot more detail. So a few things. One is as she actually goes through with the filing on the SEC, it's incredibly long, but it's worth reading at least his letter that he came out. That's where the casino comment is at. There's a few things that's different this time. So one is, well, I guess to back up, not everybody maybe knows what SPACs are. And I think, Tevis, that we're kind of in a unique position because there's a lot of new investors that maybe weren't here the last time that SPACs became very common, and Chamath did very similar things to at least warn people, like, there are a lot of risks here. And I mean, Chamath even says that, like, hey, only risk money basically this is a gamble, only risk money you can afford to lose, no crying in the casino, that sort of thing. A lot of retail is not going to pay attention to that. They're just going to be like, oh man, this guy sounds like he knows what he's doing. And I'm seeing crazy price targets and American exceptionalism. And he targets actually 4 different sectors where he's very bullish. And I'm bullish in those sectors too, for the most part. What is the way that SPACs work is in essence, this is a publicly traded company that's a shell corporation. Shell corporation, not meaning the gas station, but it's a company that actually does nothing. They have a name, they're public, they have some money from investments as well. And what they look to do is they acquire, with the capital that they have, a company that is not public. And so they merge with it, and then they usually change the ticker. And then at that point, that becomes public. Now, Special Acquisition Corporation, those SPACs have bypassed all the traditional IPO checks and balances. And as a result, there's usually a lot of sketchy companies that come to market, but there's also some good ones too. And there's one that we both hold, Tevis, which is
SoFi, IPOE.
And Chamath was, the architect behind that SPAC merger. I think SoFi probably would have gone public anyway. But yeah, it's a dangerous thing. Chamath, he's not really a scam artist, but man, I don't love him doing this. I do agree with him on one thing, though. When he goes through that shareholder letter, he talks about why SPACing. And he essentially says that there's a problem with the IPO markets, that right now we have fewer public companies than we had previously. We have all these massive unicorns. And he goes into very specific details within that letter as well, which he saw, back in 2020, 2021, but that's only increased since that time, of course, with the age of AI and everything. And even this year, like if you look at IPOs that came public, it's more than last year, and it will continue to be in an uptrend as we go through the bull market. But it's nowhere near where I expected that we would be, especially with a lot of AI unicorns that are out there that could and should probably go public. And so there's some issues with that. Now, I hate Chamath's solution. I frankly do. It's somebody's right to invest in a SPAC, whatever. I'm not saying take it away completely forever, because that would cause a lot of problems on its own. I just think it's really, really dangerous for retail investors, because most people that are in these, and most people that were in them last time, had no idea what they were doing. They were just chasing another man's dream that was setting them up, basically selling snake oil. And in fact, 2 of his best performing SPACs outside of SoFi, and there's 1 or 2 others, were those that never actually became public companies that ended up not finding an acquisition target and just returned the $10. That's bad. Now, this time there are no warrants. They do have a different cost structure. So if the price, there's no accumulation in price. After 10 years, by the way, then those that actually backed and sponsored the IPO, which I actually did very little on, I'll go into details on that in the video, that they get nothing. But the odds of that are very low. The compensation is still pretty incredibly generous, if not quite as generous as previously. And I much prefer Vlad Tenev's route for Robinhood, who is like, hey, private companies want to be private. Let me remove this.
No, I was just going to bring this up because it's like a fork in the road, and one side of it is, we need more SPACs, we need easier methods to bring companies public, and the other side of it is Vlad's solution around like tokenization. Make it easy for companies to get funding, and for funding not to be completely centralized in the hands of very small players, and for these private companies to not want to have so much public scrutiny. So it's just an interesting place to be. One thing I want to bring up, Roy, is the timing around this. I know I can see some people mentioning on the timing in the chat, but I found this post, which I thought was interesting. Chamath SPAC filings, August 2017, 3 months before the top. February 2020, right before the COVID dump. September 2020, which was a nice trade. And June 2021, 6 months before the top. So basically this being a top signal. But then the first comment is somebody actually looked at the charts and said all of these were right before a massive melt up. So, I mean, wow. Take that as you will. But you could definitely have some type of a melt up, but we're closer to the end of the cycle than we are to the beginning of the cycle, if you're only going off of the timing of Chamath SPACs.
Yeah. I think there's a lot more room to run. This isn't necessarily a top signal, but I hate it. And I prefer Vlad tokenization for private equity. As long I think there's just fewer problems, fewer risks with that. There are some, I'll give you that, but I don't know. Chamath. I'm going to make a lot of content on X, probably frequent videos as this continues to develop, just warning people. Like if you guys want to invest in it, that's fine. You may make some money. Depending on what they actually find as a target, I might even invest too. But be careful.
I was just going to ask you. I was like, hey, Roy, look, you bought some of the Figma IPO. You bought some of the, other IPO, whichever one you bought.
Bullish, but that's just a trade.
You bought bullish. Hey, man, the SPAC mergers, all of them, Virgin Galactic, Clover, SoFi, they all went from, $10 to like $20 when they first were announced. So are you going to buy this one?
Probably not, just for that. I'd have to really like the target. And there's a lot of private companies that are really attractive that I'd love to have a piece of. Figma is one of those. You mentioned it. I only got 1 share allotted, which, was upsetting. But if I had more of my allotment, if I had my full allotment of bullish, I would have taken the penalty and also the money. But that one I'm going to exit after the 30 days, so there's no penalty. I don't want to block myself from future IPOs. But in Chamath, by the way, in that letter, he did signal, he said, basically the IPO market and the way it's constructed is to benefit those that are bringing the company public more so than actual investors. And he talked about the IPO setting things up for a 1-day pop or, essentially a multi-day pop. Figma, bullish. Newsmax, certainly. Webull. Like, there's so many of that. Like, he's exactly right with the problem. I just think his solution is problematic. Figma, though, if it falls down to IPO price of like $33 a share, I'm very much thinking about taking a position, and it might. Like, this is a normal route for a lot of IPOs, not just for this cycle, but like every cycle, because of the way they're structured. And I don't think it's the best thing for retail. It's usually why I don't buy IPOs. I usually wait 3 to 6 months if I'm actually interested in the company. But if this falls to $33 a share or thereabouts, I like Figma a lot. Are you interested in becoming an investor in it at some point, if depending on the price?
Yeah, I mean, at the right price, of course. But I mean, right now it's still like $34 billion valuation. Granted, I haven't looked at any of their financials or anything, but people who are buying here at 140, you've just lost half your money. Congratulations. And you're probably going to lose a little bit more before this is all said and done, because this entire pullback that you see here is all when we're at highs in the market. Imagine we have some type of correction or turnaround, and you know, we have another leg lower. Like, Figma could definitely go the way of one of our favorites, Webull, which might look like that on a multi-year or year plus time frame. You know, it goes.
Pull up Robinhood too, just so people can see it's not just this cycle.
Oh yeah.
Rivian would be another good one, but I mean, look at that.
Palantir too. It went to $40. I remember it.
Well, Palantir was a DPO, so it's a little bit different animal. But yes, Rivian.
Holy moly! Look at Rivian. $179 peak. $11 is the bottom there on Rivian, and it went even lower than that.
My son bought Rivian at like $80 or $90. I don't remember what it was, and it wasn't a huge amount of money, but for him it was a decent chunk. And I was like, "You need to get out of this." I am giving you financial advice, Sal. He made a little bit of money and he got out, thankfully. But
with that,
like this is the normal pattern. It's structured and set up this way. And so usually the best time for us retail to invest in an IPO, since we don't have the same access as a lot of other people, is, you know, you wait until that sell off. And Figma, it's still too expensive right here, but I really like the product. I actually found out today, Tevis, that they give educators, which I'm not, and students, which I still am until I defend my dissertation, free professional license for Figma. And I'm like, oh man. So there's a lot of tools I've not played with. Well, I had like 20 minutes today to play around with it, but I like the product. I think it's really good. It's cloud native, it's AI native, like the collaboration stuff, which I've not used, but I see it's there. And even from the beginning, when you set it up, it's just, there's a reason why there was such insatiable IPO demand with Figma. And Bullish, you know, had good demand. It wasn't bad, but it's a pretty interesting company, and it'd be expensive at 33, but not crazy. And I think I might take a slice. We'll see.
Yeah, I would need to take a look at their financials, maybe listen to an earnings call or two, and just get a sense of what this company, like, I've used the product for years, like way before they were even in talks to go public. I think back in 2018, I was using Figma, 2019, around that time. And it was amazing, man. Like, we were seeing people, all of our designers were asking for Figma, and companies were slowly starting to adopt it. I think that going forward, they really have to fully lean into that AI enablement of their tool, or they're going to get disrupted by AI. Because, like, collaboration is great, but if AI can skip a step in terms of you going from low fidelity to high fidelity, you know, mock-ups, and skipping the entire wireframing stages of the design process, then you can go straight from product acceptance criteria into ideation into, specs for engineers. And that, I think, is really worrisome. And it's like, if AI can get better, you can skip that altogether, because me and the LLM can ideate together around, like, oh, you know, I'm thinking about making it like this or making it like that. What modules do you think for a UI and this is what I'm trying to achieve, so on and so forth. Here's my acceptance criteria. Here's my requirements document. Intake that and spit me out 3 alternatives. Like that all was done through designers on Figma and a whole lot of conversation, collaboration in between. But I think that if Figma doesn't really embrace that AI piece, then it's going to go downhill. And I think one area that I'd love to see them more in is prototyping. Prototyping is like amazing on Figma, and in fact, whenever we want to share some designs, we just share the prototype link, and it's like I don't know if you've ever used it, but you're basically using the application scaffolding as to like what the experience is going to be like. You're clicking on the buttons and they take you to different screens. And you're on mute.
I really love, because my home unit that I'm using here is actually on Linux. Weird reason for that, but I run Windows on pretty much everything else, including where I work and on my laptop. And some applications that I use, they have like no support on Linux at all, including what I'm using to write my dissertation, which is Microsoft Word. I have Obsidian, I have Zotero and a few other programs as well that I use, but it's like those others work okay on Linux. Microsoft is not the same. So I've actually had to create a setup. It's not like the end of the world, but basically I plug in my laptop, I hook it up, I've got my screens here, hook up my keyboard and mouse, and then I'm actually ready to go, because Linux does not have the same support for Microsoft 365. It's just on the cloud versus the actual downloaded application. But Figma, like, it doesn't matter what platform you're using. It's cloud-based. Like, I can be using Linux, you can be using Windows, somebody else can be using whatever the Apple one is. I forget. It's Safari? Is it Safari? Regardless, we can be collaborating on that, and it works. It's seamless. It's really good. I like it. So, and there's a lot of demand for use for the product. Like, they have a really good product. So, still too expensive, but I'm eyeing it. It's on the list. I prefer Cloudflare and Coinbase to keep selling off, and I'll go into heavy on those at a certain point. But Figma, yeah. Bullish though, I'm going to be out in a month. Not bullish on bullish.
Yeah, and and so we'll give Figma some time. We'll check back in on Figma in a couple of weeks, and then in a couple of months, and see where we go from there. Definitely want to take a look at. What are some of the other main topics that you want to cover just before? I know we're over an hour.
HIMS you wanted to talk about, so and then we'll go to questions.
HIMS is officially under $10 billion again. And it's been down every single day for the last 2 weeks or so. And sentiment has completely soured on HIMS. People are saying that, this company is going to have a really tough time, myself included, by the way. Don't get me wrong. Like, I think we all see the same picture. We agree on this, the two of us, around earnings. We were both listening to it live. But here's the thing. I was looking today for what company I want to write cash secured puts on, and I eventually went with Duolingo, because I'm just like more comfortable to hold Duolingo at that valuation, at that cash secured price than HIMS. But I was thinking to myself, HIMS missed revenue by like 1%. And people are acting like the sky is falling, and they've dropped like half of their market cap. Something ridiculous. Like they went from close to $70 at the peak a couple of days before earnings, and then now they're at what, $42. And so a massive amount of market cap loss of a 1% revenue miss for a company that still has catalysts and is still growing. And yeah, sure, there is execution risk and there is overhang with regards to lawsuits and whatnot. Nobody is denying those. But at what price does it become like way too good to pass up from a risk reward perspective? And so I think that for me, low 40s, I think right now it's at a price where I would be comfortable to start doing cash secured puts on HIMS again. Whereas for the last 2 weeks or so, it's been down every day, and I haven't done any cash secured puts on HIMS. I in fact closed some cash secured puts on HIMS the $40 that I had for September 19th. And so, because first of all, I never thought those would hit in September 19th. But my point being, like, I thought there was better opportunities out there for cash secured puts. But now that HIMS has fallen so much, I think that for me personally, it's a great candidate to do cash secured puts on at this valuation.
Yeah. I actually have some for $40 strike. Now, actually, all of these are swing position type stuff. So if they fill at $40 on Friday, so be it. And those, they're swing position, swing portfolio, and a tax advantage account. So I may not be in HIMS long, especially if it spikes up. I would say, and there's a good chance of this, like if we see a greater pullback, because there are a lot of short-term bearish things on HIMS. It's not all unsubstantiated at all, though some of it is. If we see under $30 a share, I think that is a steal. Actually, my younger brother, we talked about HIMS. He does some investing. He's very successful, and in his business and everything. And he mentioned about getting in HIMS. And I was like, hey, maybe wait. You might have a chance under $30, and maybe he'll get it. I said, if you see that let's talk, but that's probably an opportunity. So
that would be staggering to get it under $30 again. I wouldn't put it past the market, honestly, because I've seen crazier deals manifest. I think that at some point or another, you're going to find some footing on HIMS, and it's going to start to build a base. But every single day, it's losing more and more. So I don't think we found that base just yet. We might end up in the 30s for sure.
And I don't think I'm winning our stock competition. So, we'll have to see, but I don't think Q3 is going to be anything to write home about necessarily. And then Q4 reports in January. So they're going to do some things that I think will be good. Some announcements that'll be nice. But yeah, there's short-term bearishness really from now until the end of the year. So.
Wow, what did Neil own? He completely did a 180 in our competition.
Oh, is he? Pull it up.
Yeah, hold on.
I've not looked at this in a week, so
so
I know I'm not doing well, but
we can finally back test this against how it looks on a couple of red days.
Oh, I'm doing the work. Wow.
Roy is down on the year. That's because he had HIMS as his first pick, unfortunately.
Yeah.
Gemini is still doing very well. I think SoFi is carrying me a little bit. Well, yeah, SoFi.
A lot. But you have like 4 others that are doing good.
Lemonade did really, really well as well. Like it jumped from 40 to 60 in the past month. And then Manuel is obviously doing great because of Nebius.
Mm-hmm.
And then what did Neil have that jumped up? Oh, D-Local, I think, jumped up like 20%, right?
And UNH.
And UNH, yes.
Yeah.
Novo also jumped up.
In INTC, Intel, number 10.
Yeah. So. Okay. All right. Well, this is an interesting checkpoint in our competition.
Yeah. The only one I regret getting is Snowflake. The rest of them, I still think that there's opportunity there. We got a lot longer left, but yeah, it's not a good start yet.
I'm surprised Gemini is still holding in there, man. 8% up, and you look at the portfolio.
Yeah.
All right. Okay, cool. So shall we start with some questions? Yeah, I agree with this statement. If you've used Lovable, which I have, that's quite frankly amazing as to what it can do from just a wireframing perspective, if that's all you use it for. There's other disruptors, but not ones that have been adopted widely. I think give it time. I think there's new solutions that are hitting the market like every month or every 2 months with the speed that LLMs are developing. Okay, Roy, anything to add, or shall we go to questions?
Questions.
Did we hit the top?
No. Local top, yes.
Local top, yeah. Local top, yeah. HIM's going down so much? Yes.
Good question. Absolutely.
Yeah. Is Powell really going to kill the market momentum again?
Usually, honestly, every earnings season we have something similar where local top there's a pullback, and then we're usually relying on one of the Mag Seven, not Tesla, and not Apple anymore, but sometimes Microsoft and Meta, and often Nvidia to save the market. And we've seen that, most quarters over the last couple of years. So it wouldn't shock me if we see more pain, that Powell halts momentum, and then Nvidia reports and does quite well, and the market's like, oh yeah, bull market. That's right.
Yeah. Like I said, I think that chances are there is going to be a cut, but in either case, as I said before, I think that we might pull back on both if we do see a cut, or especially if we don't see a cut. Honest question for Roy. What are you willing to invest in? Why are you willing to invest in PayPal? I think it's dead money. Oh boy. How much time do you have, Knuckles?
That's what the market thinks. It's priced like a company that isn't growing, that isn't innovating, and yet the opposite is true. So there's a huge disconnect between the price of the share, price per share, what the company is doing, and there's a huge margin of safety there as well. Like if you look at what PayPal did today, you don't know this, Des. How much do you think PayPal is down today?
Actually, I literally just pulled it up.
Yeah, and it's not because there's any catalyst or anything. It's been beaten up so much that sellers are frankly exhausted. Can it go lower? Yes, it can, but it gets hard to push PayPal down much lower. And it has been an opportunity cost. Opportunity cost in the past does not mean opportunity cost in the future. It can in the case of things like Intel. Very different management, very different vision, and very different level of execution. And you have very clear guidance as well with exactly what PayPal is doing, why, and when. And so it's really easy to see the trajectory of the company. It's really easy to see why things are the way they are on the top line versus the bottom line, and when those things turn around as well, quarter 3 and quarter 4. So, I mean, could it be an opportunity cost going forward? Sure. But the risk reward is immense for PayPal. Doesn't mean that I think PayPal is going to perform the best out of my entire portfolio, but there's like essentially no downside risk. Short term there can be, but over the next few years, like, I don't know. It's pretty crazy that it's trading at this valuation right now. And then, like the last little piece, they have reiterated a number of times. Like there was maybe 1 or 2 things in their actual earnings report that weren't like amazing compared relative to expectations. You always have to do relative expectations. I had people telling me, "Oh, well, since PayPal's not growing 35%, nobody cares about it." It's like, well, that's dumb because most companies don't do that. And nobody should be expecting PayPal to grow 35%. If you do, cool. I hope you're right, but I don't know. So free cash flow is one of those issues. Now, they reiterated that they're going to get between $6 and $7 billion in free cash flow, which would, again, be another all-time high for them. Alex Chris is absolutely killing it on the bottom line. They had some timing impact in quarter 2, so it came in light. So what we're going to see is something around $2.5 billion for the 3rd and 4th quarter for free cash flow. So if the reason why PayPal was sold off was only because for some reason they think Alex Chris is lying, even though he always under promises and over delivers on anything from guidance, anything related to numbers and metrics, just constantly. They're going to be surprised and shocked that when PayPal puts up $5 billion, you can read too much into it, some of it's timing, but like it's a shocking number over the next few quarters for free cash flow. This company is not dead. It's going in the right direction. So yeah, it's risk reward. And there's an immense opportunity with the company. We'll see if the stock actually follows, but it tends to be when a company is executing very well, and that turnaround is real and the people realize it, that we see a turnaround in the stock price action as well. Maybe not. Maybe this will be the first time a company that's generating $7 billion in free cash flow goes to zero. There's a first time for everything.
And for people who have stuck around and have boycotted Tanner, I'm going to be giving out a couple of memberships here. By the way, Roy, we both have 10 free memberships that we can give out every month.
I can't. They don't let me do it for some reason. I've never been able to figure it out. So
yeah, I've been creating more members only content, and I'm finding it's like I'm liking it, having people actually engage with it. So that's good.
So let me just share my screen and you walk me through with how to give this because I've missed it. I don't think there's anything
Sure.
going here that shouldn't be. So
do you want me to throw up your screen?
yeah, you can, and you can just show me.
Well,
So,
actually, get out of that screen. So go to youtube.com. I can see your screen in Backstage.
oh, so it's a different screen.
Yes. So yeah, and whoever got the members only, congrats. If you didn't, consider subscribing and becoming a member. Right beside my name on the channel, there's a join button, and you can click that, and you can become a member. And I'm trying to get more content out for members, so definitely let me know what type of content resonates best with you. I did a portfolio one, and I did an options trading video that I recorded on Saturday. Okay, so Roy, now click on the stream as though you were a viewer. Yeah, just pause the video.
All right.
Okay, now go to here. Can I throw this up the screen?
Yeah, it's fine.
Okay, so now go to right beside chat. There's a $sign.
Okay.
And click on the $sign.
Ooh.
And then click membership gifting. And you don't have it. I don't think you have it.
Yeah.
Can you scroll down to the bottom of that? Yeah.
Yeah.
Unfortunately.
I've even chatted in to support, and they're like, "Oh, there's no such thing as membership gifting." It's like, come on, my friends that are able to do it. Why can't I? Is it a Canadian only thing? Like, no, it doesn't exist. Okay, it does, but short Google. No, I'm just kidding.
Yeah. So there is a benefit for boycotting Tanner and sticking with us for over an hour. That you run the chance of getting some free memberships. Okay, so let's continue with this Q&A. Let's see. Bought the dip of Duolingo. I sure did. I bought yesterday when it surged up, and I also bought today. Not shares. I bought cash secured puts today. Wow. Thank you, Brock, for the 5 memberships. We're going to have a lot more green in the chat, I think. So Duolingo is something that I want to keep running the wheel on. So yesterday when the stock surged up, I bought shares, and I also did covered calls at 285. And now that the stock fell, those covered calls are like 70% profit in a day. And so I bought cash secured puts at 235 because also yesterday I closed my previous cash secured puts at 250, which turned out to be a great trade simply due to that volatility. And Duolingo, I want to be in for a longer time period. Roy, how do you feel about Palantir that you bought last week in the benefit of hindsight? You're on mute. You're on mute.
Really good. It was a small buy. I think it was down like 5%. So I can survive being down 5% for long term. So I'm fine with that as well. And it's a small amount. Like I said, it's DCA. It's not I'm going all in and doubling my position at what was all-time highs at 168. It went up a lot higher than that. But I'll be adding like here and there. This is like a monthly DCA. It's not an often thing. It's going to be slow. Now, if Palantir goes to that Citron's crazy price target of $40 at Palantir, I will probably own just one stock. which is stupid. I don't know. I won't do that. But I mean, I'll be super concentrated in Palantir at that point. But yeah, this is just a slow DCA. Like my first buy was 5 shares, guys. So it's fine.
Yes. Okay, let's continue here. And did the market sell off because last week data showed a slowdown in July, or any other data, or something else? Why did the market sell off today, other than,
I think it was because of rate cut probabilities had shifted some, and largely the market had been in the mood, which it typically does in a bull market, of completely ignoring anything bearish and anything on the downside. And I think people were looking for an opportunity, basically to sell. There needs to be consolidation. It's a healthy thing for the market. So I don't think there necessarily has to be a reason. And I think that's a mistake that, a lot of times people in markets like us and also AI makes. Like I saw a headline today that HIMS was down because Novo Nordisk partnered with, help me out with the name, the pharmacy company that's
GoodRx.
GoodRx, which the price point's $500. If you don't have insurance, you're probably also don't have $500 sitting around for a monthly subscription. So that's really a nothing burger for HIMS. But that's AI was looking for a reason to ascribe to the fall. And so it found one from a headline that was a day old. And it was like, oh, yeah, clearly this is by the way, SoFi Invest that came up with that idea. And I'm like, okay, SoFi Invest, you do pretty good, but you're dumb right here. And honestly, we all can be. Sometimes the stock price just moves for whatever reason. There was last week, there was a day where PayPal was up at one point close to 5%. And there's no headlines. There's no reason for it. I was just like, it's a stock.
Yeah. And like I said at the beginning, these are very healthy things for the market to experience. You cannot just go straight up all the time forever. Stocks need to take a breath as well and form higher bases.
Yes. Yeah. It's a really healthy thing. Consolidation is a beautiful thing. It's not fun to see red in your portfolio. I get that, guys. But I mean, it's part of what is investing. And honestly, if you're newer in investing, it makes sense. Usually, if you have a larger portfolio, to take some gains on the ride up, have some money, have some dry powder for pullbacks. You never know how much it is, but have those positions like I do with Cloudflare, with Coinbase, maybe with Figma. We'll see where I'm like, oh man, I'd really like to own more at set prices. So yeah.
Am I adding more HIMS at these levels? Yeah. So like I said, Mikey, a little bit earlier, I think this is now the price where I would start adding more, not in shares, but cash secured puts. But if it does in fact fall under $30, which is the number that Roy threw out, I would definitely be adding shares, and then also long calls as well, like leaps, if that were to happen. Christine, thank you for the $10. Buy yourself a croissant while you're in Europe. Yeah, I'm gonna have a really weird streaming schedule starting very soon because I'm gonna be off for a month. So Roy and I will have to talk backstage around when we're gonna do these shows, because this would be 2:30 a.m. my time where I'm going.
So the perfect time then. Great.
Yeah, exactly. That's when I'll really need the Celsius. But yeah, we can chat about that. Did your research next? It is literally on my short list. Matt and Chris are bullish on Next as well as VG. And I don't know, Roy, have you taken a look at Next at all?
Well, hold on a second. You said short list. Did you mean it in the way that I do it? Like this is a list of stocks I'm very interested in and keeping top of mind? Or you're like, I'm going to be like Citron and short quality companies because I like losing money?
It is on my watch list of companies that I want to be in. I posted a tweet that I was researching Next. I read through their earnings report. I listened to their last earnings call and tried to understand as much as I could, not being in LNG myself. because I came back from Mexico, and Chris and Matt were saying, hey, like this is something that the maths over the next several years, but don't necessarily buy it if you were hoping for a pump over the next several weeks or months. And I made a tweet and I said, hey, researching next. And literally, I think the next week or something like this, it jumped from $9 to $12. And it's just been sitting on the watch list ever since. I sort of didn't want to buy it when it was that high, especially because from what I heard from Matt and Chris, they were saying like, hey, the new trains are under development right now, and we really won't start making money for a little while until they're operational. So I see that it's back to 9.5 today. It's something that I'm definitely interested in getting into, but again, I have to size this accordingly in my mind relative to the return and also the time horizon I have. For example, UNH, I'm planning to be in it for months, and there's stocks that I'm planning to be in for years, and there's stocks that I'm planning to be in for decades. And so I have to really pick a bucket as to where this falls. And a lot of that is based on the confidence that I build while doing this research. So still in the research phase.
And unlike Kathy Wood, who has five-year timeframes and then gets out the next week, that's not you. Unless the situation changes. So,
yeah, Ron and Travis, my faves.
Thanks.
Next question. Any thoughts on Webull earnings? I don't know when they're reporting or if they reported. I think that the company's product roadmap looks good. I think that they're going to do well with a lot of their launches towards the back half of the year. Like fundamentally, I don't really hate Webull. Or as a product company, I don't hate Webull. I like their product, quite frankly. I just was turned off by that Yorkville Partners investment, and that's the only thing that turned me off. Right?
No, same. Like the management, there's a couple of things with Webull that I was like, it's gave me a little bit of reservation, but I went in a new way. And the Yorkville was like, well, I'm going to get out, even though I think that there's upside. They're just things that I prefer to be in more so. And actually for Webull, it just ended up being, I think I broke even. And I just left it basically in cash. So I'd rather be in cash than Webull. So that's probably telling you all you need to know. Although I still think like what we saw for Webull, like there's a lot of opportunity there. It just management and leadership are a core aspect of my investing thesis. And so if I find like that there's a company that I think is amazing, or at least it has an amazing product, and I think they have a terrible leadership, usually that doesn't happen, but it can. I would not invest in that company. I'd much rather invest in a weaker company like PayPal. That I think Alex Chris is going to be a special leader. Sometimes that works, sometimes it doesn't. But yeah, I'm not. I'll look at the headline stuff, but I'm not looking to get back in.
Yeah. Roy, maybe you can take this one. Did SoFi take a jab at PayPal today by offering worldwide transfer? I'm sure we're going to talk about this more on Friday because that's really where we want to stick with our SoFi news. Maybe we can talk about it in the context of PayPal.
No. What they're going to offer is actually more expensive and probably going to be worse. There's a little bit of differentiation there, but like it's not a bad thing what SoFi is doing. It's not a huge thing as far as revenue. What it really does, which is nice, is it's another additional service and an additional product as well for the SoFi app itself. And so for those that are already using SoFi, it makes that product better. Plus, there's some folks that, because they mentioned Mexico as the first target where they're launching, a lot of remittances happen that direction. So it'll get some use. It's not a huge revenue driver. But frankly, Zoom is not for PayPal either. They acquired Zoom, I think, without much in the way of plans way back in the day. And it was essentially left for dead. Wise and a whole bunch of others, Rio. There's a ton of remittance companies out there. Crypto has only made it easier and continuously will. So PayPal Zoom is fine because it's back-ended on PayUSD. So that really helps inform the margins. But like, I don't know, remittance is a low margin thing. It's such a small amount of PayPal's business, they don't even break it out separately. And it's frankly because they did not execute when they acquired it. was it 2015 is a while ago, but there's one of those things that they just kind of left in place. And if it wasn't for crypto, by the way, they would have divested from that platform, maybe for pennies on the dollar, simply because that's just not a great compelling place to be in. You need to do more than just remittances.
Roy, you would genuinely make a killing selling PayPal merch.
Oh, man.
I agree with this wholeheartedly. I think you should do this.
I might. I'm gonna write that one down.
I think I have on my channel, and I don't know, guys, you can confirm or deny if you see it, but I think I have on my channel t-shirts for, I think it's like SoFi to 45 or something like this. Nobody's ever bought one, but they're on the channel. And yeah, 45 and 25 t-shirts and mugs. So
oh man,
I think Roy,
I love that idea. I might have to explore that just for fun because I want to own one. So I'll wear it proudly in this channel, not PayPal, but PayPal until it gets above $100, maybe.
PayPal.
Actually, I could put it right back. No.
I thought you were going to say right across my forehead.
Yeah.
Which is a better buy right now, SoFi or Nubank?
It depends on your time horizons. I think it'll be close though. I think that they're both really good buys. SoFi has a lot of momentum in short term over the next probably 2 years. SoFi easily, hands down, would not go into if that was your time horizon. Now, Nubank could surprise, stock prices could do whatever, but there is some choppiness, I would say, in the macro more so than bearishness because that's shifting a little bit. But one of the let's see, was it Citibank? I think Citibank came out and basically gave a double upgrade. They went from sell with a price target of $9 to, based on the strength of this report, they said, okay, it's a buy, and our price target will double it from $9 to $18. They appreciate and they understand that there's geopolitical issues, that there's some issues in the macro, but they're like, this bottom line is this is a company that executes and executes well. But yeah, SoFi frankly has way better tailwinds right now. And I think a lot more opportunity in SoFi over the next 2 years, which is why I'm much heavier in SoFi than Nubank. But over 10 years, probably even out.
Interesting.
Well,
I mean, one of them is my largest position. The other one I don't own. So I'll let you guys guess. Yeah. Did you guys look at VG, possibly the future biggest LNG exporter? Yeah, I think similar comments that I had on Next, VG as well. Isn't Chenier going to enter one of the indexes? Didn't I see this as well? I don't know anything about LNG, guys. I just know what Matt tells me, and I trust his word. But I'm looking at Next right now as opposed to Venture Global. Roy, are you looking at any LNG plays?
I mean, like I looked at VG just very briefly, but it's not a space or a sector I really understand that well. I have friends that do. And so if I ever entered in VG, it would be a very small position, but I don't think that I will. I like super concentrated. So I think I'll just kind of watch it and be cheering on bulls.
Chip says Roy should make a PayPal to $45 t-shirt going off of my SoFi to $45 t-shirt. Maybe that might be more appropriate, Roy.
Yep. I mean, we'll see.
He also asks whether you think his Mercado Libre covered calls are safe. It depends on, I don't know if it's or anything, but yeah.
Melly covered calls. Okay, we've got a well.
Yeah. Big dog over here.
Yeah.
Plural?
And it's plural. I mean, like, that's the thing is like, this is, like at least a $500,000 account, I would imagine, probably a lot more than that. So Chip,
yeah, I
think you're safe.
You're safe either way, Chip. You're set, buddy.
Yeah. And Duck, by the way, said, and I like that too. Just remember, guys, you don't have to invest in every sector. It usually pays to invest in what you know. So it's one of the reasons why I've been careful with biotech. I did invest for a little while in Accelera. I'm careful in energy. Again, I did invest in Enphase, but I'd studied that company for a long time. Something that I completely don't understand. maybe I'll swing it, but like long-term investment doesn't make sense. Unless I'm willing to put in the work. One of those is like air test systems. We've talked about it a little bit here. It's an area that I had a little bit of understanding in, but not a lot. And I've put in a lot of work because I'm interested in it. I think it's compelling. But if I was like, I don't know much about this, but it looks like it's worth a flyer, that would be a swing only, not a long-term position.
Yeah, that's fair. Well, speaking of, what stocks do you think are juicy and would be willing to buy a dip on? Jorge asks.
I mean, there's none like, well, Nubank is one. It's not really down much, just because that report from Citibank with the upgrade, which is actually very significant. I don't usually pay attention to price targets, but that was a big one. $13 a share. It shouldn't be trading there. It shouldn't have been 17 when it was 17. So that one feels to me like an opportunity. If I didn't have a position in Nubank, I'd be buying that. Air test systems, I ended up finishing my my position. I might add some too if we go quite a bit lower. That one's a micro cap, so it tends to just move like HIM's used to back in the day, like 8 or 10% for no reason, just whatever the macro is doing. So, and somehow it actually has a decent, well, not too decent option chain, but I sell some options on it because I'm like, hey, if it wants to go to 40 and I double my money and I'm out, well, more than double, fine. But I think that for me, at least, it was an opportunity that I saw. And I'm like, hey, I'm going to go for this and finish out my position. So I did that. NVIDIA is one of those where I know it's not much of a pullback. I think it's a great company. I think they're going to have a really, really, really strong report. I think they're incredibly well positioned over the next 5 years. So honestly, I may just add more NVIDIA soon, like especially if it continues to pull back. So, other stocks that are on my portfolio and watch list, they need to fall further, or I have too much of it to really add meaningfully.
I think HIMS and Duolingo are two names that you might have missed. I don't know, Roy, if you are interested in buying up some Duolingo. I think
I bought some. I bought some yesterday, so I'm down like 5% now. So yay! I didn't get in like immediately when that AI piece came out by the CEO. And I'd been thinking about Duolingo. I saw the pop, and I'm like, you know what? I should have just bought in the pre-market like I tended to if I want to get in the name, because I was thinking like, I don't know if it's going to be a long-term permanent position, but it's a swing. Maybe it'd be a swing that's a loss. We'll see. But I'm happy to hold that one for a long time too. So it's kind of an invest and investigate type of thing. But I've investigated Duolingo for a long time. So I don't know what I'm doing there exactly. We'll have to see. But if Duolingo keeps selling off, I agree with you. Like here, you can push back on me, and that's fine. I know that Chris disagrees. I think here it's maybe slightly undervalued, but it's pretty close to fair value. It's a SaaS that is growing incredibly well, that I think has a much deeper moat than the market appreciates. But I mean, frankly, it shouldn't have been in the 500s. So part of the pullback is simply because it was priced beyond perfection, I think.
Yeah, I don't disagree. I don't disagree at all. I think the thing that makes me really excited about Duolingo, even more than their growth rate, is just how large their user base is. 48 million daily active users is very impressive. And over 100 million monthly active users is very impressive. And so that is really, to me, the leading indicator for what we could see in the future. Because if you can monetize those people just a little bit more, or if you can increase their engagement just a little bit more, then all of a sudden you're playing with such large numbers that that you can snowball into very big financial results. And so that's the thing that I like about Duolingo, is that they're so massive. And that's the thing that I could back into a fairly aggressive valuation when you compare it with like the Snapchats and the Pinterests and the Twitters of the world, to see, okay, what is their user base and what is their engagement and what is their monetization per user and the lifetime value and the customer acquisition cost of all these users, and build a profile, financially speaking, of the users. And so I think that's something that a lot of people don't frame it that way when they look at Duolingo, and I think they really should, because you can understand the hidden potential there with regards to Duolingo's growth rate. I don't personally have a Duolingo streak. I actually tried to sign up for the chess course on Duolingo, and it's apparently not available in Canada because the world hates us. But yeah, I'm playing around with the app and trying out more stuff. Duolingo is an interesting one, and I think that it could go lower. Absolutely, I think the stock chart, it could go into the 200s for sure. It could, but it would just be even more of a deal. Like it's at $15 billion right now, and I think for 50 million daily active, 48 million daily active users, like I don't think you're paying an arm and a leg for that.
Yeah, no, I agree. The other two, like Coinbase, I just had to look at the price because I've not been, I had a busy day at work. But if it falls to like about 250 or so, I may end up getting a position there, or at the very least selling a cash secured put, probably just one. But that's a very attractive name, unless I know Crypto Winter is going to come up at some point. I don't know. Maybe I'll wait. They're doing so much right though, and they're positioned very well. And I think we have longer legs before the Crypto Winter. I do think that we're getting one next year, and I think that'll be the real opportunity to enter Coinbase. But at 250, it makes a lot of sense to me. Versus right now, it's like 302, 303. Cloudflare would have to pull back a lot, but I'd love to have a position in Cloudflare. It's if you exclude Palantir, people would be screaming about Cloudflare's overvaluation and it being a bubble and everything. But they're valued, they're pricey. They're too pricey for me to buy right here. But there's a reason why that they're valued where they're at. It's a phenomenal company with a lot going for it. So, let's see if the pullback continues. But in the after hours, it's looking like it. And my portfolio got hit a lot today. So one of the nice things too is like if your portfolio is getting tanked, just be like, you know what? I don't need to look today.
You don't, nobody's forcing you to look. Nobody's forcing you to sell. And you don't lose anything until you sell. Josh asks, once CapEx growth cycle slows, doesn't NVIDIA's multiple get crushed? The revenue is traditionally cyclical. What if this time is no different?
What if this time it's different?
Sure. But I think cyclicality aside, like there is a point to be made that you're going to, for any stock that's very high growing, NVIDIA, Palantir, Hims and Hers, all of these companies that throw up amazing growth rates year over year, they're going to come into the following year where they're going to have tough comparable periods. And then the market is going to say, well, we rewarded you the previous year because you were putting up 100% growth rates. All of a sudden now you have to compete with that 100% growth rate.
Yeah. And NVIDIA is down 3.5% today. So, I mean, there's a pullback, like along with everything, but realistically, like, I don't know many people that think that this CapEx growth cycle is going to last maybe a year or two and then it'll be done. Most people are instead seeing the opposite, that this is going to continue to accelerate for quite some time. That doesn't mean it's going to last forever. There is an element of cyclicality with some of their business aspects, but there's a lot that's not. And this is a company that, as far as iteration, is very different than where it was in previous cycles, where a lot of what they had, like for instance, the prior reason why a lot of NVIDIA gained a lot of gains during COVID was, of course, gaming, which is very cyclical, and Bitcoin mining, which is very cyclical. I don't think AI is very cyclical at all. There will be seasons where CapEx is ramped, but it's here to stay, guys.
Yeah. If this time is different, Josh adds, NVIDIA to the moon.
Yeah, I mean it still is it's $4.29 trillion market cap, so it's already at the moon, maybe to Pluto.
Matt says, you know how you can keep your portfolio value flat on a down day? Add money to the portfolio. Don't be a brokey. Add more money to it. Today's results is what it is. We've had a good year to date. That's fantastic year to date. Brock says, I'd love to add Broadcom on a 10 to 20% market pullback. Added AMD on the last one we had not long ago. And there's another name that people thought was going to go to zero. AMD, I know Jeremy added that one, and people were giving him a whole ton of crap because he sold Tesla and added AMD. Well, all of a sudden, Tesla's pretty much where it was, and AMD has doubled. So, it's just the Twitter echo chamber and what actually makes you money in the stock market are very aligned sometimes, but very misaligned other times. So,
but we both agree, no Rocket Lab, right? Solidarity.
no Rocket Lab.
Yeah, we can't add to that. Or
I mean, I think we both made a pact to stay broke and wage slaves for the rest of our life. So yeah, no Rocket Lab for us.
Yeah.
That is for the rich.
On the Rocket Lab gains, the taxes would just be too much. So
yes, exactly. Yeah, we like money, but we don't like money that much, guys.
Yeah. I mean, there's too much. Like it may cause me to get in all kinds of trouble just having too much money. So
yeah, it's right.
We'll leave that one to Matt.
Yeah, we'll leave all the temptation that money brings for multimillionaire Matt Money.
That one is on my short list of names that I'm watching closely. So if Rocket Lab does fall to a certain price, and I need to figure out where that is. It's well above where I'd buy it right now, frankly. But no, it's a really good company. I realized that. I thought I was late, and then I realized no, I really wasn't late. And I modified my approach that I invest then investigate when I'm looking at a new name. It's worked well.
Yes. There's many names out there. Did you see Trump's 13F filing? I did not, but maybe you did.
No, I didn't.
Yeah, Duck, maybe fill us in on that one because neither of us saw it. What's your stop loss on SoFi? I don't have one, Luffy, because when this thing was at $4, your boy was buying at $4, even though I was deep red on SoFi at that point. So it's a long time.
I think having a actual stop loss that you put in position, that's a necessary thing for traders. I'm not really much of a trader. I do swings, and it's okay on swings, but I prefer to be more manual there and set alerts. On long-term positions, why do a stop loss? It doesn't make sense because what usually happens for retail, if you're a long-term investor, then something like the yen carry trade day hits and everything's tanking off. You get stopped out just in time to sell at the bottom, and then it recovers fully and then goes up. Again and again, stop losses. If you're a trader, I think you need to have them. Swing trade, maybe put them, maybe do them manually. Don't do it on your long-term positions, guys. If something changes and the thesis is broken, you also don't need the stop loss. You just go in and you hit the sell button.
Yeah. My stop loss for SoFi is $0. Yes, Josh, this is me as well.
I will be fully out at SoFi if it goes to zero. So,
yeah, I will also be liquidated. Yes. But look, if the growth story changes or if something fundamentally changes with the company, then yeah, I'll sell out of SoFi tomorrow, regardless of what price it's at. And that's, I think, the main thing that you have to keep in mind is, has anything changed fundamentally with this company? And if the answer is no, and if the only thing that's changed is price, well, then I'm not really going to do anything about that. Let's take a look here. Any thoughts on Zeta earnings? Is it going to continue to gain momentum? Yeah, Zeta had, I think, really good earnings. The stock is definitely heating up. It was like $19 or so when I last checked it. It's a company that I looked into, but I didn't invest in it for a couple of different reasons. Other than that, I don't really have any commentary on Zeta. Roy, do you know anything about them?
I looked into it very briefly, probably less than you. International, it's hard for me to. It has to be a very compelling company for me. Nebius was a swing for me. I liked it. I think it's a great company. I like Nebius better than Zeta, frankly. Zeta looked decent. Didn't make a position. Didn't swing it. Not too interested in it. They're advertising, and I didn't have a grasp enough of like the type of advertising they're in. I think that there's some headwinds against a certain segment of advertising, which is why we're seeing the trade desk down substantially. Actually, that probably got crushed today. Down 4.5%. It looks like it's going to break $50 at some point soon. I guess it did briefly before too. But there's other aspects of advertising that I think are doing incredibly well. I know one of them for them, I believe, was CTV, which is it's actually growing very rapidly. We'll have to see where they go, but It's not really a field that I know some, just a lot of it's just because of PayPal that they've gotten in advertising, which forced me to do a lot of research. Also Google related to advertising. I did a lot of research there, but it's different enough where I'm like, I just don't have a great feel for this. It's international. It'll probably be okay, but there's other international companies I'd rather be in, and I have a concentrated portfolio. So yeah, but it looks solid.
Yeah, definitely a retail name that I've seen been thrown around. Healing Pain Naturally. How come Tanner's boring arse gets 700 people watching and you guys get 50? We actually have about 150 between mine and Roy's channel. And I think that's a couple things. Maybe it's his mustache. Maybe it's the charts. Maybe it's the fact that he has like, double the subscriber count that we do, and he goes live pretty much every day. I think consistency really pays in YouTube, and we're keeping consistent once a week with Bootleg Weekly. But I mean, Tanner is keeping consistent daily with his live streams, and people just get into the habit of saying, "Oh, well, Tanner's going to be live tonight." I don't know if there's anything beside that.
Yeah, and he's a friend, so congratulations to him.
Yeah. Yes, you mean Canadian Clark Kent. Grow your stashes for November. Roy already has a full beard, but I'm sure I can do it. I can probably grow a better mustache than Tanner. We'll see. If you two run one more ad while I'm on the toilet without my phone. Yeah, I turn on automatic ads for the stream. YouTube is supposed to just make them automatic. I don't know if it's too much. Let me know, and I'll turn them off, and I'll keep them manual for future streams. But yeah, I'd love to hear from you guys because I don't control the ads on this stream.
Yeah, I realized I didn't have them turned on for the first hour at all, so I don't know what it's doing now. I switched it on, but it's on balance. I've heard from some people it's like every other minute, and I've heard from others it's like, oh, I see one like twice in your entire. I'm like, I don't know. YouTube does YouTube things, and Google doesn't tell us why.
My day isn't complete without a Mitt in the morning. Man, I think the parasocial relationships from streamers is so freaking strong. I noticed this when I went to Vegas, that people were just like, "Oh, Tevis, hey, how's it going?" And like they knew a lot about me, and I'm like, I don't know anything about you guys. I appreciate you guys, but it's yeah, I think just the relatability. I think that's one thing that Bootleg brings is that relatability. Like we just shoot the shit. We talk about whatever is on the news. And, we don't really have any strong script or agenda. Why are we only seeing hymns and Duolingo ads?
That would be
amazing. Football. Yeah, I got to talk about football bets that I'm putting on maybe in the members only streams. Dookie is here with the $2. Thank you so much, Dookie. Let's take a look. Is it true Hood sells their stop loss data to hedge funds? Roy, you know this.
I don't actually know that. It's what I've heard, and I may be wrong. What I've heard is that is visible to not necessarily hedge funds, but market makers, which can in turn sell that data or information to others. That it's not a Hood specific thing. I may be wrong in that, and that may be a former understanding. But if it's Hood, it's not like specific to them; it's industry wide.
Mm-hmm. Fantasy Viewer League would go hard. Everybody puts in one SoFi share. I really like that idea, Duck. Maybe we can organize something. That would be quite fun. What are you guys going to do tomorrow? Buy or play options or nothing at all?
Usually nothing is a better choice when you're not sure. So we'll have to see. Like if there is a capitulation moment in some of the names that I'm looking at, although it may be a falling knife and it may go lower, if I'm like, hey, this is an attractive entry for the long term, I'll buy. Some that I'm like, okay, we're not quite there. For instance, like let's say that Coinbase sells down to like 270 tomorrow. Like that would be a big drop, 10% drop. It could. Like macro continues this way, Bitcoin sells off. Who knows? It wouldn't be where I would want it for 250, but what I'd probably do is sell a cash security put there. So, we'll have to see what happens. Hims likewise, although I have cash there, but said I think I'd say probably 80% chance of those fill by the end of Friday. Maybe it'll be different, but it certainly feels that way, and probably it'll keep selling through it. So, I mean, it wouldn't shock me if Hims is like 36 or 37 by the end of the week, which would be painful. But yeah,
I agree. I think for me, Anthony, it's cash secured puts first, and then only once we fall to like a level lower than that will I just straight up buy shares. I did yesterday with Duolingo because I wanted to write covered calls and create that strangle for myself, but that's not like the norm for me anymore. I just do cash secured puts now because it's just easier. Okay, let's see. Tepis, any date with a fangirl yet? That would in fact be a market top. That would be a Jensen signing people's bodies type of market top. I did actually, I don't know if I want to tell the story, but I did actually in 2 years ago, I went out with this girl and she didn't know I did content at all. And then when we came back here, she saw the sign, the neon sign on the wall, and she's like, I've seen this before. And it turns out that she had stumbled upon one of my videos at some point in time, didn't recognize me at all. There's a viewer actually on my channel that lives in my building. So that's get kind of awkward in the elevator sometimes. Let's see. I don't know why I said that story on stream.
My wife doesn't even subscribe to me, so
yeah, that's fair.
Of course, like, to be fair to her, she hears all this anyway.
Bet the house on Denver Raiders. Easy win Denver. Interesting. Okay, that's interesting. There was a BMNR comment.
Yeah, somebody said,
how are y'all not looking into BMNR? Don't say dilution. The administration, Wall Street technicals all point up. This is the Tom Lee one, right?
Yes. Maybe. I don't like, even though this is a little bit different and Tom Lee is in it, I just don't like these miners as a long-term position. It's always a swing trade for me, and there may be a time when I swing into that, but long-term, like, there's a few exceptions possibly. Iron was one of those. Cypher is one of those too, I think, possibly, that could be credible, but they're always pivoting into something different, not fully on this. So we'll have to see how they are. I need to step away real quick. I'll be right back.
Okay, thank you, Roy. Yeah, I haven't looked at BMNR. I own Ethereum straight up, but I don't really own anything else, nor do I really want to at this point. I think my crypto exposure personally is exactly where I want it to be. So I'm quite happy with that. Tevis, did you get sunburnt on your arms but cover the rest of your body? Yes, this is called a farmer's tan. I do have it. Are we buying Nebius? I wrote more cash secured puts on Nebius today, and I wrote some yesterday as well. So I am and I hope those get put, honestly. Like, I hope I get those shares because I would be more than happy to own some Nebius. Actually, instead of buying Nebius shares yesterday, I wrote cash secured puts for $70 on Friday expiration. So in 3 days. So I really just, hope they get caught.
I'm not buying Nebius. It was a swing. If it goes back down like below where I began swinging it, yes. But conglomerate plays are hard for me. I just prefer. And Tesla's a bit of a conglomerate at this point, but I just prefer something that is like, this is the main focus of the business. And Nebius instead is like, hey, we got this and this and this and this. I think their core is very compelling and very good. But if I was solely investing in cloud specifically, it'd probably just be more NVIDIA, which I've bought more of, or maybe even Google.
That's very fair. I'm not 43, Dookie. I love you for the $2, but come on now. I I gotta
43.
start dyeing my hair, bro. I swear to God, I look older than I actually am. I'm 31, Dookie. I'm 31. All right.
I think people that maybe don't know us and don't know, the age of my kids or anything, they might look at us and be like, "Yeah, we're about the same age, and I've got
Yeah.
more than a decade over you."
Yeah, and Roy would say thank you to that, and I'd say fuck you to that.
Well, the fun thing is, my wife, like, we're right at the same age basically, but she went with my middle son. He's looking to go back to college and looking at the area and everything, and people were assuming that she was his girlfriend just because, like, she looks incredibly young compared to what she actually is. So when I'm like 70 or 80, like, it's going to look like I'm married to somebody that's maybe in her 30s or 40s. So it's a good
Right.
problem to have, but people think that I'm old and lecherous.
You look in your 30s.
Thanks.
My man. So,
Red hair.
okay. Let me see. I'm trying to find some questions because did she subscribe? I think so. Maybe I haven't really checked in, but I will, and I'll let you know.
Pun intended asked at 9:03, why Nebius? What's the thesis for us? We're the wrong people to ask. There was an episode that we had where we basically brought on Manuel and also Sam Solid, and those guys are both guys to follow. Manuel specifically,
and Nate Endicott.
Nate,
He
thank
does
you.
some good stuff on Nebius as well. I actually, this is literally one of my tabs because I was reading this earlier today. This is something that Manuel, in fact, he actually interviewed one of the executive team at Nebius, and that interview dropped earlier today. But this is, is it too late, basically? And it goes way in depth on all the, bull case essentially for Nebius, along with price targets. And I think it's a must read for anybody looking to get into Nebius. All of Manuel's Substack, in fact, with regards to Nebius, is worth its weight. So definitely check that out.
Yeah, and Manuel is very detailed. If you like details, you should. It's good. There's two PayPal questions. One at 9:05. Biplav asked Roy, at what price will you sell PayPal? I don't plan to sell unless the thesis is broken. My shares. I have a good number of shares. I do also have some leaps, which of course are bleeding because anything in PayPal does. If those ever go up, then I'll take gains on those incrementally. $90 strikes, or most of them. I do have some 115s for basically January 2027 or December 2026. So we'll have to see. But yeah, shares, I don't think there's any reason to sell. Plus, eventually, I do think that they will give dividends out. So this is probably just going to continue to hold, especially over the next 5 years. I really see them. I know a lot of people think it's crazy. I really do think that PayPal is going to see new all-time highs by 2030. And I think a lot of that run will happen. And I've been saying this for a little while, will happen, beginning next year, possibly. Like, you never know when it's going to start. Short term, I was like, hey, there's still some bearish things. The turnaround's nearly complete, but the reacceleration is really what we're looking at over the next 2 quarters that I think the market will find hard to ignore. Maybe it will. It's found it very convenient to ignore PayPal completely. But yeah, no plans to sell any shares unless the thesis is broken. So if Alex Chris, like for instance, if they say, hey, $6 to $7 billion in free cash flow, and they come out with 4, and there's no credible reason for that. If they're like talking about Braintree acceleration, which they are, and they're like, hey, this is the inflection point. Basically, last quarter was really when it was. We'll see that top line revenue growth, and we don't. We see things like PayPal World mentioned, and it all just falls apart. When they start stumbling like that and failing to execute, which really isn't the case for PayPal, that's when it doesn't matter what the price is. I'll sell. I'll get out. I'll be done.
Yeah.
So the other PayPal question, did you see it for you?
Yeah. Hold on. Let me find it. I want to come back to this as well. I have a smile. Steve doesn't. No comparison. Gary is asking for a membership, Dookie. Roy does have good hair genetics. Hold on. I'll get to the PayPal question. I'm making my way down. I bet Steve was really fun at parties.
He's a fun guy in person. He is amazing. I bet he was.
This one?
No, 906 Realist in your chat. Yeah.
Tevis question. Why are you not in PayPal? I think it'll be a huge winner in 3 years. Yeah, I mean, look, I was in PayPal for a time period. I sold on one of the upswings and I went into something else. And basically the question is just the opportunity cost. Like it's been up and down and pretty flat when it shouldn't be. And I figured like, okay, I'd rather concentrate in something that I can focus my attention on, which in my case was SoFi or HIMS. And I don't think I am against PayPal at all. I don't think I'm against even going back into PayPal. I just feel like the market doesn't respect it right now. And this earnings was even more evidence of that. And until the market does respect it, then like I would rather see a breakout of PayPal and buy it after and miss out on a lot of those gains, but I have confirmation of some type of breakout or something changing in the sentiment, then buy it and then wait for some type of breakout, because that could potentially not manifest for some time. Yes, my gray hairs are from red market stress. If UNH sees 270 again, will you be picking up more shares? I'll definitely be writing cash secured puts, David. I don't think I'll be picking up shares. I think the last time that I bought shares flat out was 237. That is, and I'm happy to provide timestamp or confirmations on that. Just call me out on X. But everything else has been cash secured put for UNH. I keep hearing about this Manuel. I recognize the avatar. I need to track down his programs. Yeah. MVC investing on X, Pedro. So definitely check him out.
Yeah.
Let's take a look. How about selling puts on PayPal? Possible if the premiums make sense.
Yeah. Premiums are a little bit better recently. I looked at them on Monday too. But usually the premiums are just not there. That's a stock that doesn't move rapidly. And usually you need that for the higher IV. Not always the case, but it's a little bit more now. So if you're asking that for yourself, only you can answer that. But I never mind selling puts on a position at a strike that I'm very happy with. It's easy. You get money or you get the position. It's a win-win.
This is true. Roy, do you live in shitty Canada as well? No, he lives in Texas. But thanks for calling it shitty, healing pain naturally. That's very honest of you. Did you see my SoFi deal news? Yeah, okay, here. Hey guys, did you guys already talk about the incredible SoFi remittance and blockchain deal news? You mean the one that happened like weeks ago? Yeah, I think we both have made individual pieces of content on it. Obviously very bullish. Yeah, go ahead.
I think he's talking about the remittance stuff. We did mention it. I think it was early in the Q&A period.
The news today.
For SoFi, it's remittance stuff. Remember you said, or somebody had asked, were they going directly at PayPal, or you asked, or you threw up a question?
Yeah. No, we talked about that earlier in the stream.
Yeah, this is like, it's accretive as far as like making a SoFi as a product and as a platform a little bit better. It's not accretive as far as revenue. Remittance is very, very low margin. It's not a huge deal at all in that respect. But I don't think that this is like the end of extra features and extra things that they launch on their app. Even this year, there's going to be a lot, especially when Technisys, when all that's fully ported over, basically, and they're operating on their own tech stack. We're going to see a ton of stuff like this. Some will be direct partnerships. Others will be things that they worked on. And the better and better they make that SoFi platform, not just new features, but also latency, reducing some of the clutter, are some things that they frankly need to work on. As that platform gets better and better, there's going to be fewer and fewer members that end up churning off, and more that are very happy that refer to other friends. So it's a good thing. It's just not a huge revenue driver, which frankly, I mean, they're growing rapidly. So I wouldn't worry about that at all. I loved it.
Felipe asks, what are your guys' lottery pick for debit call spreads for January 2027? If you have one, and I think he asked it again, high probability of happening for debit call spreads. Roy, remind me, debit call spreads are, when you sell a covered call and then you buy a call to create the spread, or is it the other way around?
I believe he's referring to vertical spread. So you are selling a higher leg.
Yeah.
And then you're buying the one at a lower leg. Basically, it reduces the price of your buys in net, but it also caps the gains. So I did this, for instance, I actually have some on Nubank where I'm like, okay, I'm actually going to sell the higher leg. And if it gets above a certain amount, I'll just, it caps the amount of gains. It's not infinite gains, but usually I think that's fine. So Nubank's the only one that I have in this. I had Lululemon as a swing position. I hit my max loss threshold, and so I got out of it, but it was a vertical spread as well. And Webull as well, but because of the management stuff, we ended up getting out of that.
I think, so I actually had this exact thought. I was looking at the option chain today, Felipe, and there was 2 tickers I was looking at doing a vertical spread for. One of them was HIMS, because HIMS at 42, I can do like a January 2027 and go like even something like 85, 60s or something to that effect. And I can get paid really well. And the second one was in fact Nebius. I was looking at selling the 110s for Nebius and buying the $80. And I think that Nebius for 2027, of course, both of those, I think the spread was really favorable. So those would be my candidates, but basically companies that I think have upside ahead over the next 2 years that they can hit the maximum threshold, and companies that are volatile enough where they can hit it even way before the 2 years.
Yeah, they're a useful tool. I wouldn't, over leverage in them as well. But if you're very bullish on a position, you're like, hey, like Lululemon, for example, I don't remember what strike I bought, but I wrote 500 strike. I'm like, I don't think Lululemon's getting above 500. Yet I was getting premium for that. I'm like, sure. Made sense. I did this with Robinhood too previously, when Robinhood was like $40 a share. No, it's actually under 40. And I was like, okay, this is actually shortly before it went all the way up to 100. I sold before that time, but I sold $80 strikes and I bought, I don't remember what strike, but it was significantly lower. And I got a lot of premium from it. The nice thing about these, and be sure to study, appreciate the risks with options. Options aren't for everybody. Don't make your whole position options either, please. But the nice thing is, and I was mad at myself because I didn't have cash to spare at that point. I was fully allocated buying the dip during tariffs for a little while, and I couldn't buy. I wasn't actually legally allowed to buy Robinhood for about 30 days because I went to their event and I signed the non-disclosure thing, and I couldn't buy or sell any Robinhood position. And that was all during the tariff dip, and I was so annoyed. But as it dipped, and I did sell the vertical spreads, I think either before or after, I'd have to look at the timing of it. You can rebuy that top leg of the strike, which removes the ceiling, or you can sell, a new strike. There's a lot of optionality in that, pun not intended, but they're interesting vehicles.
Yeah, I mean, I have spreads on UNH like right now, and I was talking about this on the members only live stream, that in addition to my strangle and my position, I also have spreads. And I think it's a cool strategy. It was like the first time I was doing spreads, Chris was showing me how and why. And I kind of want to do them now on some other positions, but obviously in a small amount because I can blow up my portfolio like that.
Yeah. I mean, there's risk any kind of option. I actually think there's a little bit less with vertical spreads, but it just depends on how you approach it.
Okay. Yes. Their main thing this week is Jackson Hole and Powell. So we'll find out about that by the end of the week. Roy, do you follow NFL?
Lightly. So, because of my work schedule, dissertation stuff and everything, I don't really have free time. So I'll follow the playoff season and I'll look at scores. Also, my team is terrible right now, so I don't follow them as closely. But I'll catch some games. Tennessee Titans is a team that I like. I have terrible taste in sports.
They won just recently, or I guess they tied
preseason. But yeah, preseason is meaningless. But I mean, they had the first overall draft pick, so we'll see how he does. They've been mismanaged for a long time. Like if they were a company, I would not invest in them because leadership and culture, it's just not been there.
I think.
Yeah, I am a PhD candidate hoping to defend. I've got one full chapter left to write. I still have a partial one to finish out here, hopefully in the next month or two. And then I have the conclusion, which it's at most 10 pages. So have to have a second reader after that, and then I'll be able to defend. So I'm hoping to defend and be done with it in the spring semester. We'll see. A lot of writing to do.
Have you ever thought about buying calls on the dollar as a hedge? No, I am not that smart. Nor am I that safe, probably. I'm probably way more degen trades than that. Curious on your opinion on Crocs. It's not a growth stock, but I think it's a modern day AutoZone.
Are they doing buybacks like on this one?
I have no idea. I definitely don't think they have a dividend. So
yeah, I'm not sure what the comparison is, and definitely Captain Crunch, like say what that comparison is, because I'm curious. Crocs is one back during COVID, before I really appreciated the whole like invest in what you know, and like one of the advantages we have in retail is we're closer to the ground of like the real world and the normal consumers than people that are managing massive funds. They have no freaking idea like what trends are or anything. They just look at numbers, not people. And I remember being shocked that, especially my daughter, but a few others as well, actually my wife too, we're all like, man, Crocs, these are great, these are awesome. And I'm like, okay, a lot of people are thinking that. It's not just my family thing. And that at that point, like if it was in the like, okay, I'm seeing this, maybe I'll take a look and see if they're publicly traded, and they were. That would have been a good opportunity. The other, which I do have some shares now, ironically, was Duolingo. Duolingo during COVID, we were like, oh man, this is a great product. We were using it. I was using it actively more time than, which is really nice. My kids were all into it. I think the only one that wasn't was my wife. We knew a lot of people that were similar. Had I known that they were a publicly traded company at that point, I probably would have taken an investment. But I didn't realize it until it had ran up. And I was like, oh man, it's 120. It's not too late, but there's other things that I was piling into like Palantir. But sometimes you get extra opportunities. Duolingo was a lot higher than it was, but it feels like redemption kind of.
yeah, I remember this. Crocs was huge during COVID. I remember Dumb Money, Chris Camillo was making this one of their big trades, and researching the little add-ons, what are the gibbets or whatever they're called that people added to their Crocs, and Justin Bieber did the whole his own model and whatnot.
Mm-hmm.
Yeah, I haven't looked at Crocs or even thought about Crocs since that time. Yeah, the charms. Okay, yeah, that got me to come in the chat. Okay, so we have successfully done 2 hours and 22 minutes of the Ron and Travis show. Get it right, Feeling Pain Naturally. It's Ron and Travis show. And I think, Ron, shall we leave it there?
Sounds good, Travis.
Okay. Everybody, thank you. Thank you so much for watching the Ron and Travis show tonight. And your boy Ron and myself will catch you next week. Yeah, we usually do 1.5 to 2 hours. Thank you so much. And subscribe if you're not subscribed. Join the channels if you haven't joined already. And yeah, that's it. Okay, I'm done rambling. Bye.